So in this exercise, we are going to learn about calculating financial ratios. So let's apply the financial ratio analysis that we have learned in the module to select and pick your right stocks for your portfolio. So first we will calculate the financial ratios of the stocks in your portfolio that you have picked already and decide whether they were a good buy or not. Then you validate this buy decision by comparing it with a stock score recommendation given on trackinvest.com. You can choose to replace a few stocks that could have been a bad buy basis your ratio calculation and replace it with better stocks in your portfolio. Let's take an example of a sample financial ratio analysis that we have done in the next few slides to understand how to do this exercise. So first, we need to know and understand where you can get the financial information of all these companies. One of a good resource is that on moneycontrol.com. Let's see how we can get these publicly listed, publicly available information of all the companies. I go into Money Control and type a stock that I like, TCS. Let's take an example. As soon as I do that, all the information about TCS will pop up. Its current stock price will show on NSE and BSE as shown on the screen. Then as I scroll down, I see a lot of information, and on the left side, I can go into the financial section where I can get the balance sheet of the company. This entire balance sheet is available publicly for all companies in every sector. You can actually get all the figures, and you see here you have a lot of years present as well. You can copy this entire information and paste it into an Excel, and it will paste just like that. Now, let's look at some figures, and let's look at another sheet that we need, which is a profit and loss statement. In this way, we can also get the profit and loss statement for TCS, from where we'll pick up certain numbers as well. Again, you can see there are 5 years available, and as you scroll down, all the profit and loss data is available for TCS. So you can get the profit after tax, you can get the dividends as shown over here. These are the key inputs for all your financial ratios. And as in the earlier case, you can also copy paste this entire information directly into an Excel and record it for future use. Now, let's go on to actually put all this information together into one slide. So I've taken the price of TCS, I've taken certain columns I need from the profit and loss account, certain columns and certain data from the balance sheet itself, and now we will calculate each of these ratios. So we need to first know which are the columns that we need to pick. We need to pick total share capital. We need to pick earnings. The earnings you will see in the profit and loss sheet on the left side under the profit and loss after tax for period March 2016. The amount stands at 22,880 crores. We'll pick the dividend value. This comes under the equity share dividend. On the left side, you will see a value under the March 2016 column at 8571. You will see the stock price, which is on the top left of the screen, 2357. That's the current market price of TCS. And now we'll calculate the ratios. So first we calculate the earnings per share. Earnings per share is simply the earnings value divided by the total share capital that you have picked already. Then you have the P/E ratio. The P/E ratio is the price of the stock, which is 2357, divided by the EPS, which you calculated earlier, 116. The P/E comes at 20.3. Then you have the dividend per share. Dividend per share will be required as an input for a dividend yield. But let's look at how that's calculated. Dividend per share is nothing but the dividend value that you took from the P&L statement on the left and divide that by the total share capital at 197 crores. You'll get the dividend per share is 43.5. Now, dividend yield is this dividend per share by the stock price. This essentially tells you how much dividend you are earning per rupee invested, per 100 rupees invested rather, because it's dividend yield percentage. ROE. ROE is the return on equity we learnt in the earlier module. Return on equity is nothing but your earnings divided by the total share capital. Now, total share capital, when I say here, it's the total shareholders' funds, which is the total share capital 197 crores plus the value of 58,669 crores. This adds up to 58,866 crores. That is the total shareholders' funds in the company. So the return on equity is actually the total earnings the company makes or returns per equity of shareholders' funds invested. In this case, per 100 rupees of shareholders' funds invested, because it's a percentage. Now let's look at, if you do this and calculate and compare all these ratios for the last 3 years and watch the trend for this company itself. Then you follow the same process and repeat the whole calculation for another 2 companies in the same sector. Take Infosys and Tech Mahindra, for example. And then you compare all these 3 ratios for these 3 companies and decide which one is your best for your portfolio. Let's see how to do it. TCS. The EPS has been on a rising trend line in the last 3 years at 94, 98 and 116 in financial years ending 2014, 2015 and 2016 respectively. We already showed you the calculation of 116. You should have arrived at 94 and 98 with the same process. In the same way, the P ratio stands at 20, which is good. The dividend yield is at 1.9% and ROE stands at 39%, which is pretty impressive. For Infosys, the EPS has been on a declining trend in the last 3 years at 178, 106 and 69. PE stands at 14. The dividend yield is at 0.5% and ROE stands at 28%, which is much lesser as compared to TCS. Tech Mahindra. The EPS declined from 115 in 2014 to 24 in 2015 and then recovered to 33 in 2016, a rather sharp decline. The P ratio stands at 14, same as Infosys. The dividend yield is at 0.5% and return on equity stands at 24%, which is almost same as Infosys. So if I compare all these 3, my final analysis would be, in terms of profitability and steady growth as indicated by the EPS and PE ratios, TCS looks like the strongest stock as of now of all these 3 companies. In terms of return to shareholders' money, TCS is way above the other 2 stocks. In terms of a good dividend paying stock, TCS again delivers an yield that's double of that of its peers. So TCS is your best bet among all these 3 stocks. Now, you've gone through this entire thing. Let's just look at the key points and summarize. Do the financial ratio analysis for 3 similar companies in a sector that is favorable to you. Pick any sector that you like. Maybe a sector that you work in, or a sector that you know enough of, or the sector that's close to you, something that you like. Try to interpret these ratios in the correct context and apply them before buying or selling any stock. Do not forget to make a note of the changes you make in your portfolio stocks along with the reasons for these changes. All the very best.